Well, Donald Trump says the U.S. should take control of devastated Gaza Strip and relocate the area's residents, drawing criticism and concern in the Middle East. China's antitrust watchdog weighs a probe into Apple's App Store fees and practices as tensions between the world's two biggest economies escalate. Plus, Novo Nordisk jumps after the Danish drug maker says sales will likely surge again this year as it builds supply for its blockbuster weight loss drugs. Now, we'll speak to Novo's chief executive in the next 20 minutes. But first thing is first, look, there's quite a lot going on in the markets. I have to say the news flow is absolutely terrific today because it's coming from all parts, and of course it's having a big impact on the markets. Now, U.S. stock futures, of course, falling after some of the tech concerns. European stocks, look, they're a little bit volatile. Certainly, we have different fortunes depending on how tech-rich your index is. Now, a lot of the focus will be on the latest U.S.-China trade war, and that was made clear that Xi Jinping is taking a more cautious approach than Donald Trump's first term. Tariff risks remain, of course, at the forefront. There's quite a lot to also with Apple, so we'll get to that in a second. But Alphabet and AMD have disappointed after downbeat earnings. Fourth quarter revenue at Google's parent company missed estimates after growth in its cloud business slowed. Now, while chipmaker AMD gave a lackluster outlook for AI, Alphabet pre-market down 7%, Advanced Micro Devices down 9%, and then China, of course, weighing on a possible probe into Apple's App Store fees and practices. Pre-market Apple down some 2.7%. Again, I think a lot of market participants will try and figure out over the next 24 hours exactly how much more retaliation China can put in place. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, politics and tech continue, of course, to dominate the news agenda as Donald Trump's policy moves and announcements reverberate around the world. In a moment, we'll discuss China's latest response on trade with Peter Elstrom, Bloomberg's executive editor for global tech. But let's begin with President Trump's comments on Gaza. He's drawn sharp opposition from Saudi Arabia and the wider Middle East after saying the U.S. should take control of the devastated Gaza Strip, move the area's residents to other countries, and rebuild it into a new, quote, Riviera. Trump made the comments during a news conference with the Israeli Prime Minister Benjamin Netanyahu.
I do see a long-term ownership position, and I see it bringing great stability to that part of the Middle East and maybe the entire Middle East. And everybody I've spoken to, this was not a decision made lightly. Everybody I've spoken to loves the idea of the United States owning that piece of land, developing and creating thousands of jobs.
He has a different idea, and I think it's worth paying attention to this. We're talking about it. He's exploring it with his people, with his staff. I think it's something that could change history, and it's worthwhile really pursuing this avenue.
With us now is Rosalind Matheson, Bloomberg's EMEA news director. Rosalind, I think the question everybody really wants to know, is Trump serious about Gaza?
Well, it seems so. As you saw, he's talking about this, saying it would be a stabilizing factor in the region. And the interesting thing is what he seems to be doing is endorsing the idea of Israeli control of Gaza and the U.S. supporting that militarily and then obviously involved beyond that. And he's saying to do so, that would mean relocating, moving people out of Gaza, which has been destroyed heavily by this conflict between Hamas and Israel, relocating them, making them go to other countries in the region, and then rebuilding and casting this as a stabilizing factor. Of course, we're seeing the reaction today from countries in the region and others saying this would be potentially extremely destabilizing for a very, very fragile region. What it really does is take the idea of a two-state solution for the Palestinian people off the table, and it's talking about relocating, making people move out of the place that they live in, and countries in the region saying, hang on, this could be extremely dangerous in a region that remains very, very delicate and fragile. And so you're seeing that instant reaction today. Is he serious? He said it's something he wants to explore. And we know with Donald Trump, that he does like to look at these places and opportunities. And so we do have to take him quite seriously in this regard. And obviously something that you can see the reaction from the Israeli Prime Minister that he would very much welcome.
Ros, thanks so much. Ros Matheson there, Bloomberg's EMEA News Director. We'll have a full debrief, of course, on the situation in about 25 minutes when Ros joins us back. Now, China has also announced a potential investigation into Apple's policies, including the fees it charges app developers. Now, the investigation predates the tensions over tariffs, but could become another flashpoint. Apple shares trading lower in U.S. pre-market. With us now is Peter Elstrom, Bloomberg's executive editor for global tech. Peter, I mean, this is, again, and welcome to the program. In the last couple of days, we thought that China would have a tempered, response, or certainly they went after the U.S., but in a tempered way. This feels the same way. I mean, it's not the bazooka that they could have done.
Yeah, that's exactly right. We see these tensions between the two countries rising. The U.S., of course, imposed the 10% tariffs on China. And in response, we're seeing some measured responses from Beijing right now. We have the investigation into Google. And just to be clear, the Apple investigation was not announced. This is a sources-based story where we're reporting that we understand the regulators at SAMR are taking a look at Apple. They've informed the Apple executives in the country that they're concerned about some of these practices that they have in the App Store. These have been issues globally, really. It's not just in China, but they're taking a 30% cut of revenue from the App Store in certain cases, and they're also limiting your payment options so that you run through the Apple Store. So it's not clear whether this is going to escalate into a probe right now, but it's clearly serious for Apple.
Peter, I mean, I have to say in general, U.S. tech has had a pretty incredible 3 weeks, mainly for the wrong reasons. I mean, a lot of the tech bros were at inauguration, then we have DeepSeek, and now AMD was quite disappointing, as was Alphabet.
Well, the big question in the earnings season this year is, this quarter, we're seeing that these tech companies are making enormous investments in AI, and they really want to understand whether the companies are going to get a payoff from that. Are they going to get revenues? And Alphabet in particular, you saw Sundar Pichai came out and he said they're going to spend $75 billion. Enormous money, much more than analysts had expected, but revenues came in a little bit disappointing. They were expecting $83 billion. Instead, the company only reported $82 billion. It sounds kind of minor, but at this point, investors are very sensitive to this idea that AI is not going to pay off, despite these tens of billions of dollars that they're putting into all sorts of capex.
Peter, thank you so much, as always, for joining us. Peter Elstrom there. Now let's assess how markets are reacting to the first volleys being fired in the trade war between the U.S. and China. With us now, Vasiliki Pachatouridi, head of EMEA iShares fixed income strategy at BlackRock. Vasiliki, thank you so much for joining us. I mean, you basically now have to be a geopolitical expert, right, trying to understand what it means in terms of trade and tariffs. And 2 weeks into, the Trump presidency, there's just a lot to weigh through. How do you think he'll use tariffs from now on?
Exactly, Francine. And I think the fixed income market has been used to becoming a geopolitical expert and a volatility expert the past couple of years. Listen, I think tariffs clearly they mark an escalation in trade protectionism. Of course, there's still a lot of uncertainty out there. Our view is that probably a 10% tariff is going to be like a baseline. A 25% could be used as a negotiation lever from here on. But I think markets, they need to kind of absorb the news and kind of think if they want to recalibrate portfolios or not. For us at BlackRock, recent developments have really reinforced our underweight in U.S. Treasuries and the fact that we think you're not compensating for taking duration in the Treasury market. People should expect to be compensated more. Also, the Fed has very little room to come to the rescue should we see a stagflation shock. On the other hand, we're turning more positive in euro government bonds. Obviously, the ECB has more room to act and cut rates, and they have been decisive the past couple of months. And I think, the supportive ECB is making the case for European duration a bit more positive right now.
Is there anything in Europe that looks attractive given the downbeats expectations on Europe?
Yeah, I mean, if we stay into kind of the rate space, we can start with core European rates. We like bonds more than French government bonds. Obviously, over there, we're not taking any directional bets until the political dust settles. Bonds are not cheap, but obviously supported by ECB cuts. And when you look into periphery, I think investors, they're really trying to lock in yields and kind of capture that yield, particularly from BTPs and Spanish government bonds. Probably a bit more value on the latter.
Vasiliki, thank you so much. We'll get back to Vasiliki Pachatouridi from BlackRock. There's plenty more to come, and this is Bloomberg. Well, still with us, Vasiliki Pachatouridi, head of EMEA iShares fixed income strategy at BlackRock. Vasiliki, thank you so much for staying. We're talking a little bit, so we started talking about treasuries and then we moved on to Europe. I mean, the ECB is actually well telegraphed. They wouldn't give us a neutral rate, but otherwise the path maybe seems a little bit more smoother than other ones.
Yeah, definitely. I think we should expect like back-to-back rate cuts from the ECB until kind of we reach a rate of about 175. And I think this is, again, as we said earlier, a supportive environment for European government bonds, but also European credit. And I think investors this year, what they're looking for from the bond market is that carry spread income as opposed to kind of duration and spread. So European credit is an attractive market, obviously not without risks. What could be the risk? The risk could be a slower rate cutting cycle from the ECB. The risk could come from tail risk on the spread front, and that's why we've seen some investors using ETF put options to hedge that risk. But overall, if we're concerned about growth on the back of tariff developments, credit tends to do okay even within a subdued growth environment. Elsewhere, we do see demand for kind of more income-focused strategies, particularly unconstrained active strategies. But overall, I do expect, coming back to Europe, it feels like a very European-focused segment. But again, if we even think about the FX dynamics, the cost of hedging back to Europe will eventually become more expensive. So again, paints the picture for European fixed income.
Yeah, and then so we have the German elections, and let's see what happens in France. Okay, the UK, so there's a BOE tomorrow, which I think is probably the most interesting event of the week, because they'll have to try and make sense of all of these shifting geopolitics and trade.
Absolutely. So what do we expect from the BOE? I think it's very well telegraphed, a 25 basis point cut. I think the decision tomorrow is already based on kind of inflation surprising on the upside, the growth being slower than expecting, and loosening labor market. I don't think tomorrow we're going to get a reaction to recent developments. But what I will say is that we still like short-term yields. The two-year yield is pretty much yielding as much as a two-year U.S. Treasury. It's a trade that we've been seeing kind of coming up since last year. We had the second year of record flows into yields from bond ETFs. And I think there is still room for investors to clip on that yield.
Short end?
Short end, yes.
But I mean, and this is regardless. I know this week, like the UK probably had a good week, or the Prime Minister had, after being attacked by Elon Musk relentlessly 2 weeks ago, because they could be maybe spared because of tariffs. What if that changes?
I just feel that like kind of anything longer duration across region, people are a lot more cautious. A lot can come in, the issuance events, and kind of the front end is definitely more anchored. And from a valuation standpoint, that's why the attractiveness of the two-year yield market.
Vasiliki, when you speak to clients, I mean, how much do they actually want to change their portfolios?
Yeah, it's interesting. I mean, the past 3 years, we've seen $1 trillion going into fixed income ETFs alone. Half of that has gone into government bond ETFs. What we expect coming on from now is kind of, again, that rebuilding of the income sleeves. Cash rates are coming down. The neutral rate is coming down. What other sectors would investors go beyond U.S. Treasuries and government bonds? We talked about credit, high yield, unconstrained kind of parts of the market, EM. So I do think we're going to see a broadening out of flows into fixed income. And we polled 1,100 clients yesterday across Europe and Asia. About 50% of them, they said no major change on the back of the recent development. About a third turning a little bit more bearish, looking for hedges such as short duration tips. But the rest, I would say, they're also looking for opportunities. And we did see some flows into credit just the last couple of days.
Vasiliki, thank you so much for joining us. Vasiliki Pachatouridi, their head of EMEA iShares, a fixed income strategy at BlackRock. Coming up, Novo Nordisk reports sales that beat estimates, and we'll be speaking to the company's chief executive. That's next, and this is Bloomberg. Welcome back, everyone. Now, U.S. equity futures, European stocks actually down. Let's get the board, and this is really due to concerns over the trade war and some pretty disappointing earnings from Alphabet and Advanced Micro Devices. Now, yen, gold rising as investors definitely seeking some of the safe havens. The 10-year Treasury yield dipping, the dollar weakened. Some of the key events this week include earnings report from Amazon, but also U.S. jobs data, which may, of course, impact market sentiment. Now, talking about the markets with us, Vasiliki, Pachatouridi, head of EMEA iShares fixed income strategy at BlackRock. Vasiliki, I guess to understand Donald Trump tariffs and policies, you have to understand what he wants with the dollar, or whether he would mind if dollar were to strengthen from here.
Yeah, I mean, obviously the most direct effect of tariffs has already started, and it is through the weakening of the dollar. Obviously here in Europe, everyone is talking about the euro-dollar parity. I mean, I do see that coming. It's going to be driven by the monetary policy divergence, the interest rate divergence, also the fact that still dollar is a safe haven and euro is more vulnerable to weaker trade conditions. But ahead from here, expect more volatility, and going into later this year or like next year, it also depends how countries will respond to trade. So a retaliation or stronger or more coordinated retaliation would put pressure on the dollar, would be good for U.S. exporters, but ultimately we also don't know what success looks like for Donald Trump. Again, for investors, I think they are looking about the cost of hedging and staying closer to home where they can.
Vasiliki, thank you so much. I know I hear that a lot, which is not too bad for some trading floors, right? If you're on the good side of the trade and there's volatility. Exactly. Vasiliki Pachatouridi, their head of EMEA iShares fixed income strategy at BlackRock. Now, Novo Nordisk has reported better than expected sales in the fourth quarter amid increased global demand for its blockbuster diabetes drug Ozempic and obesity treatment Wegovy. Now, the Danish drug maker says it expects revenue to grow by between 16 and 24% this year at constant exchange rates. Now, I'm joined by the chief executive of Novo Nordisk, Lars Fruergaard Jorgensen. Mr. Jorgensen, thank you so much for joining us. It's always a real pleasure to speak to you, and I know you're a very, very busy schedule and a busy man, so thank you for taking the time. The U.S. president has promised tariffs on foreign pharmaceutical goods and has also threatened Denmark specifically for tariffs as he seeks to gain U.S. control over Greenland. What potential impact, Mr. Jorgensen, do you see for Novo?
Yeah, thank you for having me, Francine, this morning. So, I think we live in a slightly changing world, but for a company like Novo Nordisk that has already globalized over many years, I think it's important to note that we are also an American-based company. We have more than 10,000 employees in the U.S. We do a large part of our supply chain manufacturing in the U.S. We have research and development. So I feel comfortable that we can supply the U.S. to a large degree from the U.S. Of course, all companies have products moving across geographies to keep supply chains running. But I don't think we are much different than anyone there. And I think, the base case is that this is something we can handle.
Do you worry? Do you have a direct line in terms of negotiations? I know we also understand that the U.S. government's price negotiation with Ozempic and, of course, Wegovy will have an impact on Novo going forward.
So what I focus on is that there is a large market in the U.S. There's also, I think, an incoming government that's focusing on health and chronic diseases, and that's what we also focus on. And then U.S. has its own pricing system, and we are used to operating that. When we launch products, we typically have a steep uptake, and then we gradually expand market access as we lower pricing over time. So in many ways, this is a known dynamics for us to operate in. And the Inflation Reduction Act is also something we are experienced with. We had our insulins part of that first round of negotiation, and now it looks like potentially our products in the GLP-1 categories in the second. So these are known, challenges to deal with. The real underlying important notion here is that this is a large market and we're only serving a fraction of the market. So there's a very large volume opportunity, and that brings better care and improved health to patients.
Do you see any potential for changes to the Inflation Reduction Act on drug pricing from the Trump administration?
I'm not sure, to be honest. We have the view that regulation that leads to price fixing is not good longer term. It will reduce the access to innovation for Americans, and it will reduce the incentive to keep developing medicines. And I think that's a negative. How it will play out, I don't know. So we focus on what we know for now, and that's, you can say, more of the same. And we feel comfortable in our ability to handle that. And invest in manufacturing, get to serve many more patients. And I think that drives volume for us, and it drives improved health for the population we serve. And I think that's a win-win for us and society.
Lars, there's been some speculation recently about demand for weight loss almost being cyclical in the year. So basically, very high demand in the first quarters and then tapering off towards the end of the year. Is it something that you've observed?
No, I think right now we see for our products a bit slower demand, and that's really linked to some changes in formulary coverage, and also that we are ramping up supplies and will be supplying more into the year. So I think it's dangerous to start looking too much at quarterly fluctuations in a market that has been impacted by how much the participants in the market can supply. So I think there is now a situation where we have access to 55 million Americans. We're only serving a couple of millions of those. We are adding significant added benefits from a health point of view. And I think that will, over time, solidify the obesity market and the attractiveness of seeking care, and that will drive volume. So I'm looking at say year-over-year constant market growth and opportunity for us, less than the say weekly script or monthly or quarterly sales trends.
Okay, that makes sense. You also said this morning that you were pushing back a filing for regulatory approval on CagriSema until the first quarter of next year in order to ensure supply. Can you give us a little bit more of an idea of what your main concerns are for pushing this back?
Yeah, we see that CagriSema has a really, really strong biology. I think it's going to be a leading product in the market, and we are developing some more claims around that. And because we believe in the product, we also want to make sure that the supply chain is robust enough. And we've had some experiences in not being able to serve the market demand. So in pushing the regulatory filing a bit, we make sure that we get, say, the full capacity and all the lines into the regulatory filing. And that means that we can ramp quicker and serve the patients who will want to be on CagriSema. So it's a small change, but it doesn't change our confidence in the product.
But in terms of the supply, I guess, concerns, would it be the injector pen or some of the drug ingredients?
Well, it's, you can say, compared to our first generation product, Wegovy, CagriSema comes with two active ingredients, and a pen. So it's a bit more complex supply chain than we operate with. And that's why we had to make sure that all of that is in place for launch. So it's a supply chain preparedness decision.
Can I also ask you about amycretin, the injection? How easy is it to manufacture, and can you move directly to phase 3?
Yeah, so this is an important topic. We saw in January some really, really exciting data for amycretin in a phase 1/2 trial. This is a unimolecular format, so two mechanisms, GLP-1 and amylin, say made into one molecule. So as such, it's easier to scale in manufacturing. Based on the relative sizable phase 1, phase 2 trial, we will enter a dialogue with the regulators in potentially going directly to phase 3. More about that to come later on. But it's really a sign of our leadership aspiration in having a number of products, teasing out the maximum benefits in this category. And we also have, as part of our announcement, that we are now submitting our oral GLP-1 for obesity in the US. So we think we can also be first to the market in having a highly efficacious and safe oral treatment for people living with obesity.
Lars, a final quick question for me, because I often think about when I came actually at headquarters to speak to you for leaders, and you always, thought about things calmly. And I think I have a lot of chief executives trying to figure out in this turbulent time how they should manage their company. What's your biggest advice or your best piece of advice to someone managing a company now?
I think the key for us is that we have a purpose of driving change to defeat serious chronic diseases. And there's a huge need for what we do in this space, the innovation we have. And no matter what happens, there'll be patients looking to get access to our medicines, and we can help them. And I think many governments around the world have the same aspiration, that even in challenging times, you want to make sure that you improve health resilience of your population. And when you keep staying focused on your purpose, bringing out better and better products, based on innovation, and you scale to be able to do that, no matter what happens, I think there's a very attractive outlook to deliver on. And then there are tactical aspects in how you maneuver that. And there, I think a company that has already globalized and can leverage the world to operate in is in a good position to do well also in a more challenged environment.
Lars, thank you so much. Lars Fruergaard Jorgensen there, the Novo Nordisk Chief Executive Officer. Now, thank you for your time. Some of our other top stories this morning: the U.S. Postal Service is temporarily suspending acceptance of parcels posted from China and Hong Kong. Now, the operator hasn't explained the move, but it comes after President Trump revoked a so-called de minimis rule for China, which allowed small packages under $800 to enter the U.S. duty-free. Washington is cracking down on a loophole that retailers like Temu and Shein have used to expand in the U.S. Most employees of USAID are to be placed on administrative leave from Friday. Now, the agency says employees stationed overseas must return within 30 days, and only people in, quote, mission-critical and core leadership roles will be exempt. Well, USAID has become a battleground in President Donald Trump and Elon Musk's campaign to restructure the federal government. On Monday, Secretary of State Marco Rubio warned the agency could be shut down after a review of its operations. And more than 20,000 federal employees have signed up for an offer to quit their jobs in exchange for a deferred resignation deal that would have taxpayers continue to pay their salaries until the end of September. Now, President Trump and his efficiency czar, Elon Musk, hope the offer could cut the federal workforce by as much as 10%. And Bloomberg has learned that Panama is weighing a possible cancellation of its contract with Hong Kong's Hutchinson ports, a potential concession to defuse President Trump's threats over the waterway. Now, the firm operates 2 of the 5 ports near the Panama Canal, but sources stress that no official decision has been made. The U.S. president has accused China of having too much control over the canal. So let's get back to some of our top stories. And Donald Trump comments that the U.S. should take control of the devastated Gaza Strip has drawn a range of responses from shock and dismissal to outrage and condemnation. Well, NATO's former supreme allied commander in Europe told us because he's the U.S. president, his latest comments need to be taken seriously.
We don't know if it's a viable alternative. It certainly doesn't look like it right now. Look, there are many, many, many steps to be analyzed before this could be realized. But I do think it has to be taken seriously. If the president says it, I hope the chairman of the Joint Chiefs of Staff, the Secretary of Defense, and the military leaders will, give it a hard look and come back to the president and say, Mr. President, here's what it takes.
Well, to try and get a sense of what's behind President Trump's thinking, we'll first discuss the Middle East, where Ethan Broner, our Israel bureau chief and senior Middle East editor, and Rosalind Matheson, Bloomberg's EMEA news director. Then we'll turn to our Craig Trudell to discuss one of Trump's favorite tools, the use of tariffs on foreign imports, and specifically what that means for the automotive sector, one of the big themes of this week in terms of trade and supply chain. So, Ros, let's start with you. We're getting to know Trump. It's been 2 weeks since inauguration, 2 weeks and a couple of days. Are these off-the-cuff comments, or is he turning imperialistic?
Well, that's the real question, trying to understand Donald Trump's philosophy when it comes to the rest of the world, because he's long been treated in a way as quite an isolationist leader. That's his philosophy. He wants to pull the U.S. back from the rest of the world. Obviously, he does not want the U.S. embroiled in conflict overseas, and he just wants a world where trade and business can get on with it. And the question is, in what we're seeing, be it his comments about the Panama Canal, be it about Greenland, be it now about Gaza, are we seeing a more interventionist nationalist president operating overseas, and what is his intention with that? And obviously the comments about Gaza in his meeting with the Israeli Prime Minister, where he talks about how he thinks that this would bring stability to the region, is causing a lot of disquiet, as you mentioned already today, trying to understand, A, how serious is he? How many steps would there need to be before this could even be more than just an idea? And what does it do to the region? And so a lot to try and unpick there. But obviously what we're seeing out of the gate this time around is a president who's much more willing, really, to talk about deploying the US out into the world versus the idea that he's a very isolationist operator.
Yeah, and Ethan, I can't, count the number of times this morning that people have asked, like, is Trump serious about Gaza? How's this playing out in the Middle East?
Francine, I mean, it's in Israel, it's sort of almost, a fantasy that the United States would come in and remove the threat of Gaza to Israel. It's not something that Israelis even dared ask of Trump. So the fact that Trump has offered it is being widely embraced here. I mean, on the left in Israel, there's an understanding that moving 2 million people from where they live, moving them into countries like Egypt and Jordan, which could destabilize them, putting U.S. troops on the ground is going to lead to likely attempts at terrorism. So I'm not saying everyone is crazy about it, but broad Israeli view is to embrace it. In the rest of the region, it is a fierce rejection because it suggests that there would not be a Palestinian state, which has been the long-standing goal of the entire region, to bring justice as they see it to the situation that began with the creation of the State of Israel in 1948.
Could President Trump force neighboring countries, Ethan, to take Gazan refugees?
Yes, I mean, it just seems so unlikely. Jordan today is approximately perhaps more than half Palestinian to begin with. It's got 1 million Iraqi and Syrian refugees as well. It's got an internal Muslim Brotherhood movement, which is threatening the Hashemite monarchy. It just seems a rather extraordinary concept that a country like this could take hundreds of thousands of people who are currently homeless. And the same with Egypt. Egypt is a heavily populated, impoverished country, which is fighting its own issues with the Muslim Brotherhood, to which Hamas is attached. It has never wanted to allow these Gazans into Egypt, into the Sinai, as Israel and others have urged it to over the many decades. So it seems to me highly destabilizing. Of course, we're in a very unstable situation here. I will say one other thing, which is that, of course, Palestinians themselves feel strongly about staying in their homeland, but Gaza is not really the homeland of the Palestinians. The 2/3 of the people who live there are the descendants of refugees from what is today Israel. And polls before the war showed that many Palestinians would happily move, but there's a huge political problem, of course.
Yeah, and Ross, I guess, geopolitics is a key part of Trump's focus, but it's always also tied to business. There was a story today about the U.S. Postal Service in China, the fact that, the U.S. Postal Service is suspending some of these inbound parcels. What more do we know about this?
Well, that's right. And this, of course, is also after he revoked this de minimis rule, which was that parcels under about $800 were duty-free. I mean, the US Postal Service does not actually carry a lot of this traffic anymore. These e-commerce operators use other platforms, so the immediate impact may be small. But what it does show, again, is like if you're a company with a global footprint operating around the world, it's going to get much more complicated as this goes on. And we may get further tariffs, perhaps with China or in other countries, and perhaps sanctions as well. And so how do you operate in that environment when you're trying to be a truly global company with your supply chain scattered everywhere? So what this is really a signal is that even though China and the US are kind of sparring on trade at this point versus a full-blown trade war, is that companies will find themselves caught in the wash. And that's just going to escalate from here.
Okay, thank you both for joining us. Ethan Broner, Israel Bureau Chief and Senior Middle East Editor, and Rosalind Matheson, Bloomberg's EMEA News Director. Let's now bring in Craig Trudell, who leads our global automotive coverage. Craig, I know Elon also has a Tsar title, but there's only one Tsar title for me, and it's our car Tsar. So we're just hearing about, the U.S. Postal Service in China. If you're a car maker right now, especially a European one, you probably worry about what comes next if he has Europe in his sights. Like, how much is this going to change supply chains?
Well, I would use the word that Ethan used, which is destabilizing. I mean, it's absolutely the case that, the likes of BMW and Volkswagen and Mercedes do have some degree of insulation here in the sense that they build a lot of cars in the U.S. They have plants in Tennessee and Alabama and South Carolina. But you also have, within these companies, Volkswagen being a good example, entire brands like Porsche that do a lot of volume in the U.S. that entirely come from Germany or from other parts of Europe. And this would be hugely, hugely destructive to their position, to their earnings. And I do think, there's not necessarily a ton of leverage that they have in the sense that, they can't really return fire and say we're going to hit GM with tariffs because GM basically isn't in Europe anymore. And so it's a really, a troubling sort of situation for these companies who could be caught in the middle, as Ross put it.
I mean, there's another deal which basically is not going through. It's, Honda and Nissan. Is that tied? I thought bigger was better in this kind of environment. I mean, is it tied to what's happening in the U.S.?
I think there's real concern about Nissan's position in the U.S. and some potential for Honda to maybe help rescue the company in the sense that, one of the things that we've seen over the last couple of years is this real slowdown in electric vehicle demand, much stronger hybrid sales. Nissan doesn't really have hybrids and Honda does. And so there was some hope that maybe Honda would be a saving grace. But what I think we've learned over the last few weeks is that Honda has some real concerns about just how serious Nissan is about sort of cleaning itself up before it goes forward with these, combination discussions with Honda. And Honda, I think, is perhaps balking unless Nissan is really serious about getting right going into these discussions.
Craig, thank you so much. As always, Craig Trudell there, who leads our global automotive coverage. Now, coming up, how should investors navigate Donald Trump's tariffs? We'll be discussing that some more. That's next, and this is Bloomberg. Now, as traders assess the impact of the trade war between the U.S. and China, let's discuss how investors should be navigating the tariff threats. With us now in the studio, Anastasia Amoroso, Chief Investment Strategist at iCapital. Anastasia, thank you so much for joining us. I mean, a lot of CEOs, a lot of investors think, I'm not sure whether this is policy. There's so much coming in at the same time. Like, what's your base case assumption of the Trump policy?
Yes, well, I think some of the tariff announcements are used as negotiating tools, as we've seen with Mexico, as we've seen with Canada, and some of the tariff announcements, I think, are actually announcements, and they're a means to raise revenue for the United States. And just to put some numbers around it, right now we collect something like $79 billion in tariffs that were previously imposed. And if you were to go to a universal tariff or you were to impose additional tariffs on China, you could probably raise $400 billion. And when you think about the non-discretionary expenses of the United States and what Elon Musk is trying to do, which is cut those back, if you could also at the same time balance that out with some tariff revenue, I think that's the real reason for why we're also entertaining this.
But is there a sweet spot for tariffs, like below 10%? Does it keep inflation not too high, but you get enough revenue? Again, it's very difficult to even understand what Donald Trump is looking at for measure of success.
Yeah, it is very difficult to understand. I think it's case-by-case basis, and it's about getting some issues tackled, like immigration, for example, with Mexico and Canada. But when you think about kind of the worst-case scenario, even if we were to go to 60% tariff on China and maybe a 10% universal tariff, it raises core PC by about 30 or 40 basis points. So, and the reason why it's not such an egregious read-through is because 60% of the basket is actually services-related. So I think that's why the Trump administration is entertaining tariffs, is because, yes, there will be an inflation impact, but it's not as drastic as some might fear.
So what does it mean if I want to get it in the market, or what's the right time to get out? I don't know if there are big market dislocations, which are also opportunities.
Right. I think there will be as the time goes on. This is the playbook, kind of the three-stage playbook that I would have for tariffs. First of all, you acknowledge that this is not going to be a one-off. These are the headlines that are going to pop up every couple of days, every couple of weeks, every couple of months. But I think this is the status quo for 2025. And so the first thing you do and say, what is the worst-case scenario and how much do we need to price in? What's the full downside of all the tariffs tariffs go on as threatened. Once you understand that, you can see what the market reaction is. If we're getting close to that point where you feel like things are pretty priced, then that's when you step in and probably buy aggressively. We didn't get there this Monday, by the way, and there's still a threat of European tariffs looming. And then the third point is, I think you should always allow for a possibility of a positive resolution, as we saw with Mexico, as we saw with Canada. So you don't sell, certainly, but you probably don't buy too early either. So the playbook is really to be nimble and to use some of this policy-related uncertainty to add to your favorite ideas, which are underpinned by solid economy and AI and things like that.
Yeah, see, I don't know what to do with the 30-day reprieve, because does that mean that we're back on track, or is it a negotiating tool? So things like, what happened with Mexico and Canada, is that going to be the blueprint for other countries, or there are just countries like China that are just too big to get a deal?
Right. Well, maybe 10% tariff on China is the baseline. And, it is a nice revenue raiser when you think about 10% and about $500 billion, and maybe the deals get done in other places. But once again, if we get another spike in volatility, I would use that to add to some of the ideas.
AI.
Right.
What do we do with AI? Is that the right time to come in, or are they priced to perfection?
No, I don't think so. It's got repriced quite a bit. And, one of the themes going into the year that I had was to broaden out your artificial intelligence exposure. Last couple of years have all been about semiconductors. And we actually had a nice reset so far in 2025. I'll talk about that in just a minute. But broadening out the AI exposure really means finding new leaders in artificial intelligence. And when you think about the total addressable market for AI, the big chunk of that, something like 80%, is actually estimated to be in software. So when you look at companies like Palantir and CrowdStrike and others in cybersecurity space or other spaces, they're starting to benefit from lower training costs and moving into that product and inferencing stage. So I would really think about reallocating some of the exposure to software. But I will say semiconductors, now that they've sort of either consolidated or traded down, are certainly worth a look again, because, Francine, we heard Alphabet report overnight. We've heard from Meta. We've heard from Microsoft as well. And none of them are budging on their CapEx numbers. And in fact, more of them are likely to be shifting towards GPU unit spending, custom silicon as well. So all of that actually does bode well and kind of re-underwrites positively the thesis for semiconductors. So I think you do buy those things that'll pull back as well.
Anastasia, for financials, is it, are they partying like it's 1999 because of the coming deregulation?
They have been. And so the question for financials is all of this priced in? And, there's so much money chasing it, and so many investors are excited about it. I think the capital market activity rebound is actually priced in, and the consensus is expecting about 20 to 22% increase across equity and debt capital markets, M&A and IPOs. But at the same time, if we deliver against those expectations, that's what still would allow the financials to move higher. But Francine, the part that's not actually priced in is the net interest income and the potential for that to grow in 2025. And when you think about it, rates are lower. Maybe they're not going to go lower still, but we're still 100 basis points off the high. So that means the lending demand should actually be, kind of incentivized and boosted here. So if we have a stable economy, lending growth can pick up. And I think that's where consensus may be surprised in terms of lending coming back and net interest margins.
Anastasia, thank you so much for joining us. Anastasia Amoroso, their chief investment strategist at iCapital. Now, coming up, we'll continue our focus on financials. We'll be joined by our columnist, Paul Davies. This is Bloomberg. More strong bank earnings, with Santander posting another record profit. For more, we're joined by our very own opinion columnist, Paul Davies. Paul, so good to catch up because there's a lot of earnings. What's driving them?
So I guess it's a mix of things. I mean, for the investment banking businesses, there's been a huge pickup in trading, especially in the fourth quarter of last year. Trump's arrival and everything that sort of entailed, and people hoped and dreamed of that, led to a lot of volatility, a lot of repositioning, and a lot of trading, even for the Europeans. And so they've done very, very well there. UBS, BNP especially, but also Deutsche. But then there's, much stronger interest income than I think people were expecting as well. Throughout last year, rates have held up better than expected. And, maybe we'll continue to do so for a little bit longer.
I like that. Even the Europeans, more buybacks, more dividends, more buybacks. Are the Europeans in a mild panic that they have to catch up with Wall Street because Wall Street has deregulation, so they just need to give back to shareholders?
I mean, I think it's been a long time coming. We've had, over a decade of many of the European banks sort of slowly repairing their balance sheets and rebuilding their profitability, and that's just now starting to come through in the last sort of 18 months or so, and more names are now able to kind of promise buybacks to shareholders. Santander today saying they're going to do 10 billion euros over the next few years. Obviously, UniCredit has been a big payer already, and BNP has done a lot. You know, names like Deutsche, they're still working to get to the point where they can actually, you know, reward shareholders properly, and Germany is still a drag for them, you know, the domestic retail banking business. And in UBS, I mean, they have plenty of capital, really, but they face a real threat from the Swiss authorities as to, you know, how that ought to be structured. And, you know, given that it's so big compared to the economy now, the politicians are, you know, fairly enough worried that perhaps the bank needs to be, you know, somewhat more shored up than would normally be the case for almost any other bank.
All right, Paul, thank you so much for joining us. As always, our Bloomberg opinion columnist on banks. I urge everyone to read his daily columns. Paul Davies now joining us at 9 a.m. London time tomorrow. We also have a conversation with some of Germany's most powerful chief executives, including bankers, and that's ahead of the election later this month. That's with Bloomberg's Tom McKenzie from Frankfurt. Up next, a Bloomberg Brief, Manus Cranney in New York. A lot to talk about when it comes to the U.S., of course, China, Donald Trump policies, and then we look forward to the BOE tomorrow. This is Bloomberg.